Hi, I'm Paige Steers, and I am here at ULI giving the insights from the experts right here at the ground floor of the show. I'm here with Tom Toomey, and Tom just participated in a roundtable event addressing really the next decade of what real estate trends are going to happen. And Tom, you deal with multifamily. One of the more attractive sectors, one of the more compounded and helpful sectors because of the GSEs and others. How do you feel about the multifamily market today as you did in the height in '07, let's say?
Well, certainly the market compared to today to '07, you first have to look at multifamily in the context that it's individual markets. And we're finding more and more markets are now getting back to the '07 highs and starting to exceed it. And so the question is why? And the truth is that generally America is arriving at home ownership has its challenges. And as a result, renting is a very positive alternative. We've seen home ownership go from 69% down to 65 and trending farther down, combined with record low supply, combined with the fact that there are going to be 6 million more renters between today and 2015, drive both the short-term and the long-term fundamentals for us. So I think everything looks very solid for the apartment space.
And does it feel so solid because of the economic malaise right now, or do you think really some of the Gen Y users prefer to be in rental space in these vibrant communities? How much of this is economy and how much of it really is the trend of, the next renter?
It's really hard to parse that into choice versus necessity. But in the end, I think where you're arriving at is that people are looking at their finances and they're looking at the flexibility. And the key to renting is that you can sustain both. That you can get up and move to where a job is, but you don't have to put down a down payment and have all that friction cost with home ownership. So I think those are the two that are the psychology playing out. And whether it's just a Gen Y, a millennia, or just a baby boom echo boomer, the truth is it's across the board. People are looking for financial flexibility and ease of move to where jobs are.
So with both preferences and personal preferences and economic viability play into this scenario, then you must feel very good about where you are in terms of owning many apartments around the region. Are you looking at 2012 optimistically then, Tom?
Well, I look at volatility in markets and uncertainty as an opportunity, because in the simple mindset that we possess and we execute as a company, the long term looks so prosperous that you have to look past the individual day-to-day volatility and uncertainties and look towards the long-term demand. And if you had that type of demand of 6 million new renters over this next 3-4 year period, why wouldn't you want to invest more, build more, redevelop more? Just seems like a great time that the numbers are stacked up in our favor.
So I would agree with you, but that means there's going to be more competition in this space. We've already seen it heat up this year. How do you compete?
Well, I think UDR competes on a couple different fronts. First, we're a public enterprise with $10 billion, and so we've got scale. We're very low levered, and so we have a variety of capital sources. The second, a great experienced team. I mean, we've been a public company now almost 40 years. I've been leading it for 10. Most of the team have been working together. And so we have experience together through many cycles. And the last, I think we've got a great product. We've got a great operating platform. We've got great apartments. 60,000 of them, 20 markets. Feel like we're really well positioned. Okay,
well, I feel like both you're well positioned and it sounds like multifamily is an industry to watch. So we'll continue to look at that competitive environment and wish you well, Tom.
Thank you, Paige.